Interest rates crossed the 7% line for the first time in a long time. So I can remember when houses were available at 2.375% and we were complaining about prices, but now it's impossible for the average American to even qualify for a loan. In this video, I will explain what is happening with the rates, how hard it is to qualify for a loan, and what are your options, so stay tuned. Hi there, welcome to your channel, The Foreigner in America, where I teach locals and foreigners everything related to money and personal finances, including investing in the markets, cryptos, real estate, and businesses. So if you're someone like myself who wants to achieve greater wealth in life, you don't settle for pennies but for Benjamins and love money. So please subscribe to this great channel and hit that bell so you don't miss any one of my weekly videos. Also, check out my Instagram, TikTok, and my blog under the same name, The Foreigner in America, and my book, which I will leave a link below for you to check out. So without further ado, let's begin. Home buyers today have two problems to face. One problem is how expensive it is to buy a house. The other is how hard it is to qualify for a loan. So let me elaborate a little bit on this. The average home today is around $430,000 if you are not in markets like California or New York. Adding to this, at an interest rate of 7%, let me show you how bad it gets. Using this calculator over here, which you can download for free as an app called Easy Calculator, I will plug a $430,000 home with a 3% versus a 7%. If I input $430K with a 3 and a 7% interest rates, both 30 years and giving a 20% down, you're looking at this. Before the Fed started raising rates and affected the housing market, you would have paid $1,450 per month just for the mortgage. Today at 7%, you're looking at almost $2,300 a month. That is $850 per month more just for the mortgage. Remember, you need to add property taxes, insurance, HOA, and utilities. The question is, how many people actually have 20% down to give for an average house? 54% of all non-cash buyers do not put a 20% down. And 70% of first-time homeowners do not put a 20% down. So let me understand this. If only 26% of first-time home buyers are putting a 20% down for their home, how much are the other 74% putting down? Well, the average is, wait for it, 6%. So that is why mortgage availability is now at the lowest level since March 2013, which was when housing was in a slow recovery from the financial crisis at the end of the prior decade. If fallen for the 7th consecutive month in September, down 5.4% from August. So if you only put a 6% down for a $430,000 home versus a 20% down with a 7% interest rate, let me show you the numbers. With a 7% interest rate, 6% down, $430K for 30 years, you're looking at a mortgage payment of almost $2,700 per month, plus PMI. PMI is around 0.84% of the house price, so another $272 per month plus property tax, insurance, and HOA. Let me show you. Someone putting a 6% down for a $430,000 home at a 7% interest rate is going to pay around $3,800 a month all in. So how do you qualify for a loan where your monthly payment will be $3,800 a month? This is the interesting question. Lenders require you to have a 28% debt to income ratio on your house. This means that paying $3,800 is only 28% of your household income. So in order to be approved for this house at a 6% down payment, you need to make a household income of $162,857 a year before taxes. How many households in America today are making $162K combined? It's less than 8% of households. 8% of households can afford the average home in America with a 6% interest rate. This is why lenders are worried. Less and less people can afford to buy any home today. The Fed keeps raising rates, which means this is only going to get worse before it gets better. Are we going to see 3% rates in houses soon? No. Next year, we're going to see maybe 8 or 9%. Two things can happen if lenders just stop getting mortgage applications before they go out of business and fire every employee in the office. One, they will begin practices of 08, where they will just lend money to anyone, not caring about the debt to income or whether the person will be able to pay back or not. Or two, the amount of renters in this country will soar so much that there will not be enough apartments to fill everyone's need, and rent prices will go crazy while home prices will fall. If lenders start the 08 practices, in a couple of years 08 will happen again, with real estate prices falling 40% and causing a disaster. Right now, it's time for you and me to keep our ears open, follow this channel, and I will keep you updated on what steps to take. Buying an overpriced new homes for $550 today is a mistake. Let me tell you why. They will come back down. The problem is how you will buy it. If you have cash on hand to give a 20% down or maybe a 25 or a 30%, you have nothing to worry about, since prices will come down slightly and you can put more money down and compensate for the higher rates. But if you're only thinking of putting 10% down or less, buy fast and don't wait. The more the rates go up, the more you will get killed with the monthly payments if you don't have cash to put down in a house. Think about it. How much can a home price go down to balance the amount of interest you will pay if rates go from 7 to 9%? You will not get it back, so don't wait. Also, you need to think about something. If you only put a 6% down on an expensive house, paying $4,000 a month for 30 years, that's extremely risky. This economy is not well. Companies are hiring less and will start to lay off people soon. So make sure you have a year worth of emergency savings before you hit the trigger on such a debt. When you rent a place, you can break the lease. You pay the 2-month penalty and continue your life. You can live off a van like many social influencers, go back with your family if you're single, or go live with a friend. There are creative ways to live when you're not in debt. But getting a mortgage is getting a debt obligation, which if you're not capable to pay back, you will lose everything. Your credit score will be ruined and you still need to find a place to live. So analyze if it's the best thing for you right now. But remember, take control of your life and take control of your money. So thanks a lot for watching this video. If you enjoyed it and found useful information, give me a like, subscribe, and hit that bell so you miss any one of my videos as soon as they come out. So have a great day, enjoy the sun, don't lose any money, and I'll see you next time.